it looks like Bitcoin might keep racing up, and it might be all through the rest of July and all of August and the beginning of September. The way the market's reacting to the high impact economic data coming out, and how both the political administration and the Fed itself, which is not technically, it's an unelected form of government. The way it's being massaged within those entities is essentially giving an extra oomph to the markets, regardless of the specificities on how how you're viewing things. But it looks like Bitcoin, you might have several green weekly candles. It's in the cards. I'm not saying that that's the most probable, but let's make sure that we know and review. We're going to start this stream off by reviewing the three most common ways that bear market rallies in both traditional markets, TradFi, and Bitcoin, how they interact with the bear market rally target, which is very simply the daily 89. It's kind of like it's not foolproof, but it's your tried and true bear market rally target. And there are three ways price interacts. Even if Bitcoin wants to race up for a couple months here, a month and a half, the next 55, 60 days into early September, I still think that one of those three ways that the daily 89 is interacted with would still play out. It could be an extended version of that. So let's go jump into these charts and start looking at these upside targets, because it looks like they're going to be hit. Let's get it. And at the end of this Bitcoin segment, before I start looking at live chat questions, I want to show you something that could mean that 17.5, it could have been the bottom for the next 400, 500 days. And something could occur that is similar to 2019, where you're almost a standalone like segment of a market segment, where things flew up from 3,200 to 14K and then went back down to 5K over a 500 day period. Something like that might happen. So we're going to cover that at the end. Make sure you stay on, especially if you're watching the recording version of this. We're going to hit that at the end. But first and foremost, I'm going to go to the 1 hour chart, and I'm going to use the MTF EMA indicator. Okay. This guy right here, MTF EMA, made by FX_Massa. And I'm going to throw on the daily 89. Personally going to make it purple so you can see how I'm doing it here. Get the daily 89. All right, way up there. And here's what we got going. And again, if you want updates like this earlier in the day, because I usually do live streams later in the day and my non-live videos later in the day as well. If you want to know what my thoughts are on the market, once, twice in the day before, way before this, then you could either join the YouTube tiers. The Cryptillion tier gets multiple daily updates, 6 to 7 days a week, plus the recordings of what we do in the Cryptillion tier on Discord, the live chats, and then links to the Discord are in the description section. And I post some bomb charts on Twitter. I have Cosasverdes with the number 2 afterward with the number 2. I've been a little silent recently because I just needed to get away from the noise, but I'm usually pretty damn active on it. But I just haven't been in the right mindset to want to hear other people's thoughts for a while. So, all right, here we go. These three areas here essentially make a box of big ass resistance. Let's just put it in very blunt, layman's terms. That's a lot of resistance, but it's a fairly big range. That's a 6% range, right? So let's keep this in mind. You have a horizontal that's more of a local horizontal. It's not like some weekly thing necessarily, or is it a weekly thing? No, it's not. It's made by this wick that Bitcoin made on pretty much all charts, whether it's Coinbase Bitcoin chart or whatever. But just heads up, depending on the chart, it does wick down to different levels. But in general, it's roughly around 25.5. That wick is going to be a big deal. Wicks that that this big, they do create heavy resistance when you come back to meet them. And the level of resistance that this type of, let's zoom in, at this wick back from May 11th, May 12th, May 11th, May 12th. Yeah, May 12th early in the morning, because the market dumped at 3 a.m. Kind of like I was. I think this is where I said markets usually dump at 3 a.m. on Saturdays, and that's what happened. I think that was it. Anyway, so but anyway, when you see big wicks like that, the power of it is similar to like 2 or 3 to 4 weekly candles aligning. These get a lot of play. All right, and now Bitcoin's coming back up to test it. So you have a 6% range between 24.5 to, let's say, 26.2. Okay, and I have it labeled the daily. You can just use the MTF indicator. So between the space between the weekly 10 and the daily 89 is going to offer a lot of resistance. Is that going to create a reversal? Maybe. Is it going to create one of those three? Going to create a pullback? Extremely likely. Extremely likely. I don't know which one of these three will create the pullback before more upside going into September, if that is what plays out. What could play out is it just touches the weekly 10 Friday and goes down over the weekend, comes up to make a lower high, and then tanks and makes lower lows. That could happen. So, I don't want to sound like an uber bull here. However, let's since things are a little bit more bullish right now, and what's happened, from a U.S. economic standpoint, it kind of looks like this rally might last. It could have some legs. All right, so don't discount 30K Bitcoin. It's going to be in the cards with how things interact with daily 89, which is what we're going to do right now. Okay, but identify that this is a lot of resistance, and one of those two things is extremely likely to happen: either a pullback from one of these three areas, or just a straight up reversal and back down, way down into this range, right? But 20K ish or lower, or 21,000, 20K or lower, potentially. So let me take everything. Actually, let's go to my origin line chart. Gosh, in my non-live video, I was saying, gosh, it looks like it's going to bounce from here. And I tried to enter a long. I thought it was going to make a lower low, which it usually happens. I thought it was going to spike down before it went up, and I didn't get to enter this. Damn it! So my morning workshop, I think that was like on a Wednesday, or I don't know what day was this. No, it was just yesterday. Yeah. We had so on Wednesday, Thursday, and Friday on my Discord community. Again, links to that in the Discord section. I get on my computer at 8 a.m. have a live show, so we can hunt getting in positions pre-market open, or plan how do we get into position upon market open in an hour and a half from that point. So either we jump. I typically actually plan to get into position an hour and a half later, and where I'm going to do it. And what I planned during that workshop was try to catch a lower low, which is very common, before it spikes up. Especially since traditional markets have been trading Bitcoin more heavily than anybody. That's usually how it works. So I didn't catch this higher low, unfortunately. And my alert did not work. I did not get in this trade. But anyway, the daily 89 here, 3 ways that Bitcoin interacts with it is either, and so without looking, just it either gets rejected. And this is traditional markets too, in a bear market rally. Daily 89, it gets rejected from it. A failure pattern happens, which means it means it prairie dogs it. Ooh, right? A failure. So it prairie dogs it. So you either get a straight up rejection, a prairie dog, or you get like a double bounce on top. That's it. Is it guaranteed to come hit this purple line? No, but as of right now, it's looking extremely, extremely likely. Right? Now, let's draw that out. A rejection. Let me draw out the daily line first. Rejection. Something. It's kind of a sad. All right, so I'm extending the daily 89 purple here. I guess I can get rid of this. Should I get rid of this for a second? All right. So I extended the daily 89 so we can see this. Check this out. A rejection would be something like this. And it goes back to this origin line, tries to do some stuff, and then fails. Okay, so let's make that red. That's one way. Straight up rejection, it hits it perfectly. And it's happened a lot. But Bitcoin and traditional markets and bear market rallies. The second way is it does something similar, races up similarly, but it goes past it, then can't use it as support, then gets rejected from it, and then it'll play with this origin line and then go down. So like a stoplight, red, yellow, green. And the third way is similar, getting up there, boom, you do find support, and then maybe even a higher high, and then don't use it as support, and then you go to the origin line and take below. So red, yellow, blue, stoplight, there you go. And you can see here that this has, I guess, confluence or agreement with the idea that all of this structure over here is going to be resistance. See that? And that would be a perfect double bounce on top of that purple line, if I would extend it correctly like this. So keep this in. Let me zoom in. For bullish case, about 29-30K, double bounce on top, prairie dog or failure pattern, and then it's going to interact, like each of these will then interact with this origin line here, right? Since that's what's been happening, right? Rejection, 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 failure pattern. So you had 3 rejections, 1, 2, 3, 1, 2, 3, then a failure, and this is a failure pattern, just like this prairie dog. So your failure pattern and a straight up rejection. So make sure you're keeping that in mind. I think you should fully prepare for one of those 3 to happen. Now, if the market starts turning around more immediately, which I would put that among the top 4 most probable things to happen, what's going to get it? Well, the most important EMA in all of crypto, weekly 10. It's real close to it. And so I don't want to be super bullish to where I convince you, oh, Cosa said, daily night's got a long, 100x, whatever. No, don't do that. We could see a rejection here, as I would say the 4th most likely thing to happen over the next couple weeks or whatever. It'd probably happen this week. If it were to get rejected from it, it's going to happen probably tomorrow or Tuesday. So within the next 3 business days. Because you have a lot of agreement with the idea that that would be simply a failure pattern, just like this was a failure pattern to this trading channel that's in right now. It would just be a second failure. And it would be the first time it touches this, which if you zoom out, let's go back to here. If you zoom out, take a look. Goes below the weekly 10, uses the origin line here as support, got rejected by the weekly 10. Boom, 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 down. Separates, price gets really far away from the red line, goes sideways, essentially tries to get up there, but couldn't, and falls down. Separates from the weekly 10, goes up, first touch, down. That could easily happen. And if we go back farther in time, 2018, or maybe even 2021, its first attempt to really test the weekly 10, it failed and made a lower low. And this was Wyckoff stuff here. Yeah, May, June 20. So it tried to touch it. It didn't even get a rejection. It came up shy. That came up shy. But its first attempt to get to the weekly 10, it often fails. And it got above on its second attempt. Got above it, used that support, raced up to point of control, used that support, busted above the point of control, got on top. Let's go back. I guess I shouldn't be on the 1 chart. This would help to not be on the 1. All right, here's another example. First time in a long time. So this was from late 2018, early 2019, 3,200 bottom. Actually, its first attempt to grasp up to the weekly 10 got rejected. Got above on its second attempt. Went below the weekly 10. Its first attempt to get above it, it did a failure pattern, a very aggressive one, It raced up. It raced up to touch it. It looked like it was going to use that as support, but then it broke down. So that was a tricky failure pattern. That looked like it was going to keep going, actually, but it did not. It got squeezed by this point of control. And these are origin lines. So I guess this point of control is like the mega point of control of all of Bitcoin price history, essentially. It's like the most important section, most important area of all of Bitcoin price. All right. But the key is the first, after you drop significantly below it, whether it's for the first time or even farther down, your first attempt to get above it, you often get rejected, and you get above it on your second try. It's a pretty common theme. Go back in time. Going back, I actually don't know if that rule applies. Yeah, it does. So if so this is back in 2014, 2013, 2014 area. 2013 to 2015, you fell significantly below the weekly 10. Where did it go up? Right to it. What happened? First try. Bam. Second try, also got rejected. Got above on the third try. That here, separated far below, tried to get the weekly 10, failed. Second attempt, a big failure pattern, and then dropped more. So it didn't even get above it all that time. It just had it had a rejection and a failure pattern, which is what could happen. And then it separated farther from the red line. What did it do? Its first attempt to get above, it got rejected. Second attempt, got rejected. Third attempt, got above. You see the pattern? Now, even though that is a pretty compelling evidence that it's going to get rejected by the weekly 10 here, the context around that, gosh, it might not be the fourth most likely. It could be like the third or second. I might restructure my weighting, because what I just did, it does really look like it's going to get rejected on its first try. But we might look back and say this was the first try and this was the second try. Let's get above to touch the daily line, right? So this one's kind of in limbo, but yeah, this might count as its first try. I don't know, which means it could get above. And so remember here that in a bear market, one of the most significant things possible to do is to close a weekly above the weekly 10. Does that mean the bear market's over? No. My personal definition of a crypto bear market being over is when the weekly 10 crosses above. So listen to what I'm about to say. It's very important. Then the weekly 10 crosses above the weekly 21. And on my chart, that's red and yellow. So let's do this. Yeah. Red has to go all the way above yellow to end the bear market. So look, see how this works out. It's literally this simple, folks. I'm telling you. Coronavirus. When could I tell that it was over? When this crossed above and it used this as support. That's it. Off to the races. Especially because it was the second time. So let's take off price. Got above it. Did price spike up? Yep, and price zoomed up right around that time. See this area? So it actually, whoever bought, I think this was a $400 million purchase across 6 exchanges. And it ended the bear market single-handedly from a whale. And it probably wasn't an institution. I think this was a single whale with perhaps a team, but because it was across multiple exchanges. I think this is a $400 million purchase. But they front-ran what? This signal. They were just front-running it because price had closed like 4 weekly candles above the weekly 10 or right at the weekly 10. So they front ran that cross. That's all that this was. Literally using this cross. So that essentially marks the end of a bear market. All right. So don't get excited that it's altcoin season off to the races just because Bitcoin, I mean, it looks like, here in the next couple weeks, it's going to close a candle or two above. That doesn't mean the red's going to cross yellow. It's got months of work to do for that to happen. Months. Like so in this, I think, and the relatively small chance that that's a market cycle low, which is not a zero chance. It could actually be 10, 15, 20%. I mean, it's possible. It really is. Especially if the Fed pivots and, the stock market rallies up to make a new all-time high or a very significant lower high. That could be the bottom for over a year. It could be. But I'm not saying that that's the most probable case. I'm not going to try to get you excited. Like, Kosa said that's the bottom. No. I mean, now, what has happened recently, uh, given that Jay Powell with the Fed in the U.S. did not do anything more drastic with the rate hikes, and he might could consider having smaller rate hikes. I mean, that actually, and that stuff just kind of, and his sentiment got released this week with that new news. I mean, that does actually increase the chance that this was the bottom more than my last live stream, because we now have more information. Does it make it the most probable case that that is the bottom? No, I'm not saying that. But the chances, let's say the chance of this being the bottom, let's say it was 8%. Now it might be like 15 to 20% chance. It's not a bad chance now. It actually could be, given that the new developments in U.S. economics. But it's still pretty far away from being the most probable thing, right? From a macro standpoint. All right, so now we know how Bitcoin interacts with the daily 89, and if you want to see, just for comparison's sake, how this works on traditional markets, and this a few times before. So this is NASDAQ futures. So you entered a bear market, which was not confirmed as a bear market yet. Where do you go up to? Daily 89, failure pattern. Actually, that was a double bounce. No, that was a failure. It was a big failure, nice failure pattern. But here, up to the daily 89. Go back in time to the bear markets. This was a short-lived, little miniature bear market. Just look at where it went in here. Look, 3 times. 1, 2, 3. Where did it exactly go? Exactly to the daily 89, and all of those were rejections. That doesn't always happen, but and then what did it do back here? Got rejected twice before it finally got above. So that's 5 rejections from the same line. Like, this is, I'm telling you, the daily 89 is the thing to look at for bear market rallies. It's the thing. And if you can get a best fit line for anything, and just make it as simple as possible, that the simpler the better. I might be making this too simplistic. Yeah, maybe. But honestly, that's a good thing. It really is the thing to be. All right, sorry, my other work phone was ringing. Okay, so let's go back in time a little more. And so this was a big bear market back this is 2007, the recession. Here we go. So you enter a recession, you get essentially a double bounce on top. There's a triple bounce on top of the daily 89. Go back below it, failure pattern, big drop, rejection from the daily 89, go down, finally get above. So you have a double bounce. So you have one of each. You have a double/triple bounce, a failure pattern, and rejection. That one had one of each. I'm telling you, this is the bear market rally line. Y2K spill. Look, bear market rally, rejection. Didn't quite get there. Perfect rejection. Double bounce failure, triple bounce. 1, 2, triple bounce failure pattern. Rejection. Finally, and rejection. Finally got above. Right? So, and Bitcoin plays with this too. Like, this is not just for Bitcoin. Now, does this work for all altcoins? No. Altcoins, not all altcoins are rocking and rolling with this. I think Ethereum might even be over it. Yeah, look, Ethereum's already over it. So at worst case, most bearish, it's going to have a failure pattern above. But honestly, Ethereum's on fire right now. It's up 100% from its bottom. This is moving hotter than almost any large cap out there. This is honestly kind of incredible. Ethereum's doing very, very well from an EMA standpoint and a structural standpoint. Ethereum's kicking ass hard. I'm actually kind of. It's amazing. It takes a decent amount of money to move this, and it takes less money to move other altcoins, whether it's Cardano or AVAX or Atom. And this is structured better than each of them. I think Curve might be a large cap that's structurally and an EMA standpoint a little hotter than Ethereum, but Ethereum's hotter than your hottest layer ones. That's a big deal. It's supposed to be a Bitcoin video, but that's saying something. Keep that in mind. So, and the reason I covered Ethereum real quick there is because it doesn't look like it's going to follow the same rule. So that might not be the target for Ethereum. Ethereum is real hot right now. So disregard, kind of what I'm saying on Bitcoin for Ethereum. Looks like Ethereum is going to race up. It already is having a nice bounce versus Bitcoin. And if you want to check that out real quick, I don't think it'll make all-time highs or anything crazy, but it could easily get back up to 0.08 to this origin line here. So this is ETH versus Bitcoin. Its next stop is this. That's not very far from all-time highs, really. Yeah, origin line right there. So that would be getting really close to all-time highs. It might have a failure pattern or get rejected by this origin line right here, though. It could, but this pattern right here, it looks like it's going to come up. So it looks like Ethereum might continue gaining on Bitcoin. So please don't apply if you like to trade. So I have a lot of Discord community members who are kind of go with they like trading Ethereum a lot more than trading Bitcoin. I personally do. I really like trading Ethereum, and I like shorting Cardano for shorts. So for anybody else out there, that's why I'm going a little bit more in depth on Ethereum as well, because I'm applying basic / simple and what I feel are high probability rules of thumb for Bitcoin, and I don't want to misguide you if you're trading Ethereum, right? Ethereum will be different. All right, now, remember, if things pull back sooner, okay, it's likely going to be in line with which means this would be a failure pattern again. Once it like a 2 failure patterns in a row at this top line. It could slam right through, get rejected by the daily 89, or it could pull back from the week 10. Come down over the weekend and then try that next week. So there are a lot of ways that Bitcoin can navigate this, right? So just because, and so let me be very clear with this, just because Bitcoin looks like it gets rejected from the weekly 10, it could still make a higher low than go through it. So you could get an initial rejection and a pullback as opposed to a reversal. It gets rejected, but it pulls back to a higher low. And it could be a deep one. It could be way down here. That's still a higher low. This isn't a low here. This is a consolidation. That's a low. It could come all the way down to 23K and then bust up the next week. So this would be weekend pullback. So if you see something like this, this would be a rejection. It would get rejected the first try. But don't think that it's going to go down to 20K necessarily, right? It might only do something like this. However, one of these 3 areas is likely going to, so you'll either get a pull. So let's make the loose assumption, not a confident assumption or a safe assumption, not that, but rather let's just for the sake of visualization. Can I do this? Yeah, I can. So the weekly 10, let's get the labels in the right spot. All right. So you have the weekly 10, you have this horizontal over here, and you have the daily 89. You could get, so loose assumption being you get a pullback, then a higher high, okay? You could get a pullback from the weekly 10, then a higher high. You could get a pullback from the horizontal, and then a higher high. And you could get a pullback from the daily 89, and then a higher high. Each of those 3 things could easily happen. Or the way price could move is that it simply it could just hit one and that's it. It hits one, pulls back and lower high, and that was it. That's possible too. Could hit the weekly 10, then lower high. It could hit the horizontal, pull back, then lower high, or it could scream right up to the daily 89, pull back, lower high, and then you're done. That actually makes a lot of sense right there. This one could race up right to the daily 89. Over the weekend, I don't think that's going to happen. I think, yeah, I don't think that's going to happen. If I had a favorite, I would say it's one of these two. Weekly 10, pull back, and then try more. So I'm going to put a question mark there. How high, so whether it forms a lower high or a higher high, I'm going to put a question mark. But if I had to have one best guess, so I'm going to put a question mark on that guy. For either lower high or higher high, right? So I don't know if it'll go like this or like this. But if I had to guess, leading into the weekend, I would say either the weekly 10 or this 25.5 resistance will create the pullback over the weekend. And I don't want to guess after the pullback whether it'll be a lower high or a higher high. I'm going to put a question mark there. But my one better guess is one of those two will happen. Weekly 10 or the horizontal will create the pullback. And I said at the end of the stream, how did I start this stream? I said something. I will end this by showing what now? I can't even remember what I promised I would show at the end. Maybe I already showed it. Oh no, I do remember. All right, something weird. Okay. All right. What I'm about to say is in question. I'm not confirming a Fed pivot. A Fed pivot meaning they're not going to try to slow down the economy much anymore by raising interest rates, okay? But if J. Powell pivots and he starts raising rates like only 50 points as opposed to, I think, 3 in a row or 75, something like that, or 50, 75, 75, if he starts easing up and pivots, I'm not saying he has, if that does, I want to let you know that I got one of my sources on YouTube for traditional market. He explains that a Fed pivot has accurately called the bottom on traditional markets, like almost every time. When the Fed pivots, that's the bottom. And so, if that were to happen, what I was saying at the beginning here, that could make this the bottom. But what I think could happen in that case is this. Something weird could happen. I honestly, if the Fed does pivot, I don't think you're going to get like a nasty bull run. I think you're going to have a small market segment similar to 2018 and 2019 and 2020, where it was like its own cycle. Because this is NASDAQ futures. It hasn't hit the middle line. It's going to do it. It always won. Mean reversion. It will be hit at some point. It's not a question of if. It is a question of when. It will be hit. Could it be hit in 10 years and this line's ascending, so it's actually, it's way up higher? Okay, maybe. But it is a question of when, not if. It will be hit again. It is the master. It's the most important straight line in all of this chart of NASDAQ futures. You cannot identify a more important straight line. Cannot. Could you get a EMA that's more important than that? Maybe, but not a straight line. And it has to be hit. It will be hit. But so let me take off these EMAs. The way it will be hit, market could do a double top, come back down, which how many days would that take? That's a year. So if the Fed pivots, I don't think you're going to have or you can make a higher high and then come down. But this line will be hit. And that would take from current, that's whatever, like less than a year and a half. So if the Fed pivots, I don't think you're off to the races like a mega 10-year bull. That's not, I'm telling you, like I'm very confident saying that if the Fed pivots, it's not going to be off to the races for years like it was just for 12 years from 2009 to 2021. That won't happen. This line has to be hit before that happens, like with a fairly high level of certainty. It's not 100%, but it's really high. But if the Fed pivots though, and traditional markets rally, whether it's a double top, so whether it's a higher high, a double top, or even a macro lower high, which honestly, that could easily happen. It gets rejected by this origin line here. And it's a high that's lower than this one. Macro lower high. Okay. Each of those would create something in Bitcoin that would frustrate the shit out of everybody, just like what's already happened. Here. Look, Bitcoin screamed up 300% and then met the lows almost again. And all of this market cycle, so let's say from low to its height, that's 218 days. But it didn't really start falling for 240 days. And it didn't really fall until 400 days. And then it dropped bad. And so 218 to 400 days is right in line with what? Each of those three things that I showed on the NASDAQ futures chart. And you wouldn't have a bull run until 2025. Late 2024 into 2025. About a year later than what I was anticipating. So you could create a baby market cycle. Copy and paste this to what's happening now. That could happen. It's absolutely a possibility. And it would frustrate, and things would not get hot enough for retail to come in. It would only be the market participants from last time finally seeing, oh, I'm almost to break even, or I'm only 50% down on the coins I held 95 to 99% down, 98% down. They'll start buying more stuff, come back to crypto saying, oh, I'm dollar cost averaging now that it's up to the races. But Bitcoin, if this were to happen, okay, Fed pivot and then get a mean reversion in the stock market sometime a year and a half in the future, you're probably not going to have a massive altcoin season. So your micro caps and small caps probably aren't going to perform well for that 400 days if this were to happen. It's going to be Ethereum and Bitcoin, and your large caps and some mid caps are going to do like a 300 to a 2,000% run. You're not going to have your 30,000% runs like Telcoin did. Harmony One had like I think something like a 28,000% run. Pirate Chain had like a 45,000. So I don't think you're going to have anything insane like that happen again, because that requires new blood. I don't think we'll cross the threat if. I'm not saying this is going to happen. I'm not saying it's the most probable, like its own mini market segment. But it is possible. But if it were to happen, I want you to understand the anatomy of it. It won't cross the threshold of new blood coming in. More money would flow into crypto from a retail perspective, but it won't be new blood retail. Does that make sense? And the rally the whole little segment would take about 400 days. And it would start going down before crossing the threshold of new blood coming in, most likely. But if it did cross the threshold, then that would mean 17.5 was the bottom, and Bitcoin starts racing up to 100K beyond. But I'm not seeing that as the most likely thing right now. So keep that in mind. This bear market could have like a 400-day hiatus here, and then it all just drops back down to where it was. And your altcoins will make a lower low. Bitcoin would potentially make a higher low. Potentially. It's not guaranteed either. It could make a lower low. But if Bitcoin were to do a 400-day thing and then start taking after about 350 to 450 days to make a macro higher low, that's when your altcoins are going to make their lowest low ever for this cycle. Almost all of them. Just like last time. Large caps made their lowest low during coronavirus. I think Ethereum and Bitcoin and maybe a few I think even VeChain did. What was it? What am I thinking of? Not Polkadot, but oh my goodness. What was the coin that went up the whole damn bear market? I can't think of it right now. Oh my goodness. I am coming up blank. Chainlink. Chainlink did not make a lower low because it was going up the whole time. So there are very few coins though, but keep that in mind. So if you're a market participant who's, you're just licking your chops over next altcoin season, which really is, it's why we're here. You're gonna take money from the new blood. It's gonna be awesome, especially if you're here now. You're just gonna slay it. But the first time you feel that it's the bull market, it might just be a market segment. Keep that in mind. And the monetary slash economic policy of the United States, it could go in the direction to fuel something like that. Okay, making 17.5 the potential bottom for the next 400 days. It is possible. Am I saying it's the bottom? No, I'm not calling bottom. It did just become a lot more probable. And somebody in my last live chat mentioned, hey, another YouTuber, uses similar styles fairly similar styles. He's more macro than me, but somebody said, hey, so and so is calling bottom. And I said, I'm not seeing that. That's probably a bad call. I'm going to renege on that. That actually, I still am not confident enough to call bottom, but that call, it absolutely, as of this week, became a lot more. It doubled or tripled in probabilities of what it had at the beginning of this week. So things are looking a little bit better, and I think Bitcoin has a strong chance of racing up until early September. But the key to identifying, if that has a better chance or a bad chance of happening is all the weekly 10. This guy right here. Does it get above this or not? MTF-EMA, you can use the 3-minute chart. I'm on the 3-minute chart, and I still have the weekly 10 up there. So can I get above this or not? If I can't get above, well, then it's probably not going up until, through September. But if it gets rejected, remember, like I said earlier, it could just have a nice pullback and then scream above. So if it gets rejected, that does not necessarily confirm. Actually, it doesn't confirm at all. It doesn't confirm that it won't bust through there on its second attempt after a higher low. It's all about what after a low's put in, does it create a lower high or not? So it's really this candle is this arrow is more important than this one to determine whether or not Bitcoin's going to go up through September. Am I making sense? But it's all about this weekly 10. It's all about that. You need it on your chart here. Like it's extremely important right now, and that's Bitcoin.